Welcome to ZUDELLA. In today's video, we will discuss how a trend works, and followed by that, we will use the same how you could have exited from the stocks which destroyed wealth. We will also discuss stocks such as Yes Bank, DHFL, Vodafone ID, ITC also. So going forward, the first thing that comes to our mind is we as breakout traders, we take trades when the stock comes out of a range. Let's say a stock has been in a range of 2 to 3 months or maybe 2 to 3 years, and unless the stock goes up, it makes new high and new low, higher low, continues to go up. So this is a normal case of an uptrend. So if I have to mark the levels, I can see that this was the range and here the stock gave a breakout. So the stock gave a breakout, so we took a trade keeping this as the stop loss, and then the stock made a high. And whenever a stock after giving a breakout touches the breakout level, we also call it as a pullback. When a stock is in uptrend, it will continue to make higher high and higher low. This is a new higher high, this is a higher low. So the stock uptrend will continue to make new higher high and new higher low. Unless the stock breaks the previous higher low, we will not exit the stock and we will keep riding the profits. But being a trend follower, you should be worried when the stock breaks the previous higher low and goes down. Let's say on a weekly time frame, and should be something that should signal you that you should either and exit the stock or either be short on this. So whenever a stock breaks the previous higher low, the trend reversal. On the same principle, the trend can be for 6 months, 6 years, or maybe 10 years. And some of the stocks such as HDFC Bank and Asian Paints, they are in long-term uptrend since 15 or more years. In today's video, we have a motive that we have to discuss stocks such as Yes Bank. So firstly, going on to Yes Bank and discussing upon weekly time frame, because whenever the previous higher low will be broken, exit. Say you were an investor who found out that the stock was in a range, Yes Bank was in a range at this point of time, it gave a breakout here. So following the same principle, we will use the part tool and find out as the stock goes up. So the stock makes a high, a low, then a breakout, higher high, higher low, higher high, and you can see that at this candle, higher low was broken, which I can mark with the same rectangle also. It was broken on a weekly time frame, weekly closing basis, that the price action changed here. If you would have not exited it here on this candle's low, because the previous swing low would have broken here also. So the first indication to a disciplined trader was at 286 levels and the next was at 223 levels. So if you would have exited it based on simple price action, higher high and higher low, you would have saved yourself from being the stock going to 14 and made lower low low. Same we can see that the same happened for DHFL. And let's say you saw a all-time high breakout, enter at the topmost level of DHFL all-time high breakout, because so let's say this was your entry. Keeping the previous low as your stop loss, you can see that which was on, if you would have followed daily closing, you would have got exit at a very reasonable price way before 341. But even if you would have followed weekly closing basis, so you would have got exit at 347 levels, low of this candle. So even though that you would have faced a 42% downfall, but with proper risk management and position sizing, and assuming that you risk only 1% of your capital, you would have saved yourself down till 16 rupees or 16.7 rupees. And having the courage to follow your price action approach and exit plan would have saved you from, would have entered this stock at a, let's say you entered at the peak most level 422 level in 2007, assuming that you keeping the previous, and it would have saved you from going till, what is the current price, 7.2. Don't ignore anything which breaks its previous swing low on a monthly time frame, because anything which is bearish on monthly will tend to fall further and it can fall for the next month to come. If we see the same on weekly also, let's say as a price action trader, you could find your entry for 475 levels. Swing low theory, the previous low, you keep your previous low as the stop loss and you get an exit. You can say that you got your exit at this candle, because here the closing was way below your stop loss and you could have exited at 362 levels and saved your. What can be learned from this video is that you should follow your plan strictly. You need to, as a beginner, if you are not aware of how the trend works, you can use this TradingView platform and you have to mark different stocks with higher high and higher low. Let's say if we mark the same for this, if we understand how the trend works, it looks like going up in stairs, and the same, just a minute. And here it, firstly it got yourself an exit here and then it fall like drastically to zero. or maybe 6 rupees now. And like, even though ITC is not a wealth destroyer by itself, but still the same principles of higher high and higher low. And let's say you were an investor in ITC who would have bought ITC at the topmost level, because I want to consider the worst situation where you will buy at the topmost level and seeing that. So assuming that you would have been a breakout trader, you would buy when a breakout will occur. So I can see that the stock gave a breakout at this level here and keeping the previous low as the stop loss to 23. So the stock didn't break the previous low until then, even though you would have been a strict weekly closing follower by yourself, and you could have seen that you would have find yourself an exit when this level was breached here. Other than this aspects, what you should learn from this video is that never go long in a stock whose price is trading below 200 DMA. DMA means simple moving average. So thank you for watching. If you like the video, share your views and comment and subscribe to ZUDELLA.